Hi, I'm Tom Lydon here in Hollywood, Florida at the Inside ETF conference here with Sylvia Jablonski, Managing Director of Capital Markets and Institutional Strategist at Direxion. Great seeing you, Syl.
Hi, Tom. Great to be with you again.
So let's look at the markets going forward. I mean, we could talk about what happened in the past, but paint a bullish strategy and how advisors might take advantage of that through inverse and leverage ETFs.
Sounds good. I'm happy to paint a bullish strategy because I happen to be bullish. And based on what we've seen last year, I think that a lot of those ideas and themes will hold up into the coming year. So what are those ideas and themes? They're technology, they're semiconductors, they're AI. So everything that touches, the actual hardware, software, Internet of Things, cloud computing, driverless cars, robotics, everything in the tech space is sort of poised to do well. And you know why? It's essentially that every technology firm, every medical firm, every sector, the consumer is investing in technology, is buying technology, and is implementing it within their day-to-day business uses. So I think we had some triple-digit returns in levered ETFs specifically. So if you are bullish on this, if you think that it will trend upwards with little volatility, 3x semiconductors, 3x tech are good places to look.
And a small amount of money allocated there can make a huge difference.
Exactly. So $100 gives you $300 of exposure. So on a 5% move, you make $15 in a day. And of course, there are all sorts of disclosures that we should put out there, but that's effectively the return for a short period.
And you got to understand the daily rebalancing.
You do. So trend is your friend. Volatility means shorter, more aggressive rebalancing and monitoring.
Okay, let's take the other side of that equation. Okay. What about if we get some headwinds and this bull market starts to come to an end? What should advisors look to do?
Sure, so two ideas for you. One is sticking with the tech theme. If you still like the idea of technology, but you think that the darlings of the market are going to pull back, you could look at a NASDAQ equal weight ETF like QQQE. Essentially, each name has a 1% ranking instead of just the big fangs leading the index forward. So you have a better diversification there. The second thing is just a -1 S&P 500 ETF. It's SPDN. So S&P 500 goes down, you generate some profit and hedge your returns.
Right.
Very simple.
Syl, great ideas. As always, great seeing you. Thank you.
You too. Thank you.